Hi everyone, Aussie Dollarman here. Welcome to another episode of the Forex Form Guide. I'd like to start by wishing you and your families a very happy Easter. I hope that you've had a lovely day. This is being recorded on Monday, the 14th of April. I didn't want to be recording this over Easter. I'll be having some downtime and spending that time with my family. However, I have put together a small Easter basket full of little Easter eggs for you. I hope that you enjoy this presentation. Before we get into it, a quick disclaimer. Nothing that I discuss in this presentation should be taken as a recommendation or trading advice. It's for education and informational purposes only. Do your own research. This is not financial advice. Trade responsibly. So in this episode, I know I'm recording it early, but I'm going to be telling you where I think the Aussie dollar, the pound, and the euro are going to be going for the rest of April. I'm going to keep that as succinct as possible. Then I'm going to give you my definition of a smart trade. Now, there's obviously two meanings to that. One is it's a smart trade. It was well executed and I didn't do anything silly with it, but you'll see my other definition as well there. Then I'm going to be taking you through a couple of dates to watch on the Australian dollar, US dollar that will be really, really important in the second half of the year. And finally, I've got a quick Easter message for you at the end. So here we go on the next slide, where I think the Aussie, the pound, and the euro are going for the rest of April. There you go. This is a screenshot taken from one of my favorite movies. Let me know in the comments below if you know which movie it is. Bottom line is, April, the next few weeks, I think the Aussie, the pound, and the euro are going up. But we'll pick that discussion up on the 27th of April in the next episode of the Forex Form Guide. Now I want to talk about smart trades. And if you haven't watched it already, check out the video on the channel, a double bottom on the Australian dollar, US dollar. In that video, I talk about a double bottom setup on the Australian dollar. There was the original bottom on the Monday, and then the market ran down. This is a 15-minute chart. You've got a little 20-point risk entry there as the swing chart turns back up and confirms this as a false break double bottom. And then the market shot up there. This is how it looked when I recorded the video. And I gave some calculations showing you a 16.81 to 1 reward to risk ratio trade. It's only a 15-minute video. You can check that out when you've got some time, unless you're already taking trades 16 to 1, 20 to 1, etc. And here's how the trade ended up at the end of the week. You can see there was the entry point that we talked about. The market ran up. A chance to add to your position here, another chance to add to your position up here, and another chance to add to your position here around that 61.80 level. Gee, that golden ratio was making an appearance during this trade. We had 16.18 to 1 reward to risk ratio. Shift the decimal place and you've got 1.618 to 1. And here we go, a low, a good place to add at 0.618 there, or 61.8 US cents. And then the market ran up on Friday night and the profit target was hit. So 2.5 days, a simple double bottom entry and a 16 to 1 profit if you don't add to it. If you do add to it, as I did, you can bump that up to over 20 to 1 over the life of that trade in just 2.5 days. So that's what I call a smart trade. Let's have a look now at why this was a smart trade. And SMART is an acronym that I put together. I have moved things around a little bit just to get that word SMART in there, but I think it's valuable. And these are 5 ways that I rate my performance on a trade. So the first thing that I always look for in a trade is a small risk on entry. You'll notice in that double bottom trade, I was presented with a trade setup on the hourly chart. The risk was a little bit larger than I wanted, so I dropped down to the 15-minute chart. This is one of the best lessons that I've learned in my more than 20 years of trading financial markets. A good trade is not determined by the size of the move. It can be, but generally speaking, it's determined by the size of your risk on entry. Think about it. The market moves 1,000 points and you get in with a 100-point stop loss. You've got 900 points left, so you've got a 9 to 1 reward to risk ratio. Or the market moves 200 points, you get in with a 10-point risk on your trade. That leaves you with 190 points left. So you've got a 19 to 1 reward to risk ratio on a move of 200 points compared to a 9 to 1 on a 1,000-point move. So it's not the size of the overall move or the impressiveness of the move or getting short on a crash and riding it all the way down. It's about getting in with a small risk on entry. Your reward to risk ratio is how big is your reward compared to the size of your risk. So if you play with the numbers, the smaller your risk is, let's say your risk is 50 points. Every time the market moves 50 points, so 50, 100, 150 points in your favor, you're making 1 unit of reward to risk. If you've got a small risk like 10 points, the market just has to go 10, 20, 30 points in your favor, and there's a 3 to 1 reward to risk ratio. 100 points, there's a 10 to 1 reward to risk ratio. You multiply your profits much, much faster with a small risk on entry. And I would encourage you to play around with that. Have a look at some of your past trades and look for areas where you could have entered on a smaller risk. The second thing that I look for in a trade is the ability to move a stop loss to break even quickly. So what that does is it takes all of the risk off the table, and it's much easier to do this if you've got a small risk on entry, because you've usually entered very close to a turning point. The market will push away from that turning point fairly quickly, and you can move that stop to break even. And if it gets taken out, you don't lose anything, but it normally means if it does get taken out, the market is going against you anyway, so you're in and out of the trade quickly. But if you can get that stop to break even, it removes probably 90 to 95% of the emotion from your trade. There are two main emotions that are going to get you as a trader. One is fear and one is greed. If you can remove the risk of loss from a trade, and with my trading style, I'm usually at break even within hours of taking the trade. I've just found that it's really made my life a lot more peaceful and stress-free because I no longer have any risk on the table for that trade. So small risk entry, move stop loss to break even, and hey, you're in a really good position already. You don't have to do anything else, just let the trade run. But there are 3 more steps here. The third one is to accumulate positions or compound or pyramid with the market's money. And that last part there is the key, with the market's money. When I started out trading, and by the way, when I started trading, the margins on FX were way lower than they are now. I remember taking about a $3 million position. I think the margin was only about 7,500. It was tiny. These days, the margin is going to be more along the lines of around $100,000. But what I used to do back then was I thought, oh, this is right at the beginning of a big move. I'm going to load up right here. So I'd go all in max margin, which is a terrible strategy. And I don't recommend anybody do that under any circumstances. But once you're in a trade and you can move your stop loss to break even, and then the market goes a little bit further, you can start accumulating positions and moving your stop loss a little bit higher, so that worst case scenario, you get stopped out for a break even. So you're building a bigger and a bigger and a bigger position, but if you're wrong, it's just a break even. So you're doing all of this with the market's money. Now, again, this is not trading advice, and if you were going to use a strategy like this, I wouldn't do it on a stock, because stocks are only open about 6 hours a day, 6 or 7 hours, and once they're closed, if there's some big news happening overnight, they can gap down the next day, so they can gap past your break-even stop loss. But I do this on the currency markets, which are 24-hour markets, Monday to Friday, and I suppose you could do it on the indices, which are about 22, 23-hour markets, but for me, I'd only do this on the currencies, and when it comes close to the weekend, I'll either tighten the stop a little bit further, or I'll take the position off if I can and look to get back in on the Monday. So small risk entry, stop loss to break even, and then when you can, increase that position essentially for free. When you accumulate your positions, you're always moving your stop loss up, so you are increasing the chance of being stopped out for a break even. But if the market continues in your favor, you're increasing the reward on your trade. And that's what I did with the Australian dollar trade last week, that double bottom trade, which took the trade from a 16-to-1 reward to risk ratio into the 20s-to-1 reward to risk ratio. Now, once you start doing this, depending on which market you are trading, you will likely get to a point where you've either maxed out your margin, or you've got enough tied up in margin you don't want to have any more in margin, so you can't really add any more positions. At this stage, and even before this stage, the fourth part of a smart trade is to read the market. What do I mean by reading? I mean form reading the market. You're always using techniques like sections of the market, bar charts, swing charts, signal bars, support and resistance levels, swing chart ranges, rating the strength of the market, what's it doing. And the reason this is so important is you don't want to get into these trades, do all of this hard work, take these great trades, have a small risk on entry, move stop loss to break even quickly, and then let the market run too long and continually get stopped out for a break even. At some point, you want to bank some profits. So you have to read the market and work out where it's going. Now, I'll tell you this, as soon as a high or a low is in the market, there is actually already some information contained in the chart that can help you identify where the market is heading to for the next level. It's not always apparent, it's not always perfect, but there is information there straight away. As the move unfolds and you form read the market, the picture is going to become clearer and clearer and clearer. Your job as a trader, you don't have to call these moves years in advance. You just have to recognize as you start to get close to a top or a bottom that the time is nearly up for this trade, and then you can look to take profits on the trade. So you do that by form reading the market. Notice as we go through these first 4 steps, I haven't talked about Gann cycle dates. For me, they only come into play at the beginning before I take my entry. I'm only looking to take these entries into trades on time pressure dates. By the way, that 9th of April low for that double bottom, I had 2 planetary cycles giving me that area of the market to watch and 2 lower vibration cycles giving me that area for a low. So it was an important area to watch. But once I'm in the trade, the rest of it, there's very little in there from, say, tunnel through the air. All of this stuff, getting a small risk on entry, moving your stop loss to protect yourself, accumulating positions, form reading the market, that's all there in the public eye in Gann's books under the heading of form reading. If you're someone who has been studying Gann for a while and you can't make consistent profits from trading, and I'm certainly not having a dig at you, we all go through our rough patches. It's always hard in the beginning for new traders, but if you're struggling to make ends meet as a trader and you just want to get profitable, I can tell you Tunnel Through the Air is not the book that you should be looking at, although there is some good motivational stuff in there. Where you need to be looking is Gann's form reading stuff, and I'll talk more about that in just a moment. It's the form reading that's going to keep you safe in the market and that's going to get you your consistent profits. And then Gann's cycle work, the squares, all of that is just going to improve your trades. It's just going to improve your analysis and improve your trades and increase those reward to risk ratios often by a lot. But it's the form reading that's going to make you profitable first. And so many traders overlook that. They want to go into the cool stuff. But to me, form reading is just as cool as forecasting. I use both, of course, but they are both very, very cool. And then you can probably guess what the T is in smart trade. It's take profits. As a trader, your job is not to capture every single point of the move. In fact, in Jesse Livermore's book, Reminiscences of a Stock Operator, which was written under a nom de plume, Edwin Lefebvre, he said so many traders go broke just trying to capture that last little bit of the market. Your job as a trader is to make money. You have a starting point or an origin point, we'll say, where you are now in the market, and then you've got a destination or a target point that you are heading towards. And that might be $1 million, it might be $10 million, it might be $1 billion or $1 trillion, whatever you want to aim for, but you've got a target there. Your job as a trader is to map out your pathway to that destination, a little bit like a GPS, and then take steps in that direction. And a smart trade at the end of the day is a trade that moves you closer to your final destination target. And you can't get there unless you take profits at some point. If you keep holding on for more and more and more, there's a very good chance that you're going to get stopped out, as I said earlier, for a break even. And then you're just wasting all of that time and all of that emotion as well as the trade unfolds. So that's what I call a smart trade, and certainly the double bottom on the Australian dollar, US dollar, which I put up there shortly after I took it so you could see it unfold throughout the week. But that trade there is what I call a smart trade. Now, you can make your own decision on whether that was a smart trade or not, but to me, that's a smart trade. It had a small risk on entry. I was able to move stop loss to break even quickly, and having a small risk means the market doesn't have to move that far before you can move that stop loss up as well. So I moved the stop loss up. I was able to accumulate positions with the market's money. I form read the market the whole time, and I took my profits and locked in that reward to risk ratio. I know traders who have been up 20, 30, 50 to 1 on a trade, and then it's come all the way back down to a break even or worse, a loss. A key part of being a successful trader is taking profits. You don't want to take them too late. You don't want to take them too early, but you want to take enough profits to keep you going and to satisfy your needs as a trader or for your lifestyle, and also for compounding your money and growing your trading account. Now, the fourth one there, read the market. That stands for form read the market. Obviously, I didn't run with F, form read the market. Otherwise, we would have SMAFT. And I thought SMAFT trades didn't quite sound as good as smart trade, so I changed it to read the market. But form reading is a really important skill if I haven't already made that clear. The good news for you is you don't actually have to decode any of it. You don't have to go into Tunnel Through the Air and work out, now, where did Gann hide the form reading? Just open up any of Gann's books or courses. You'll find form reading and trading skills in there that Gann gives you, and it's some of the best out there in the business. I know 100 years later, there are other ways to trade and do things, and you can learn things from different sources on trading and making profits, but Gann stuff works. It has passed the test of time. It's a great place for you to start, especially if you're not at the stage yet where you can make consistent trading profits. And to learn form reading, I've said it a few times, I'll say it again. How to make profits in commodities is my favorite Gann text for that. It's section 2. If you haven't checked them out, check out safetyinthemarket.com.au, their active trader program, which has changed over the years. I was a student of Safety in the Market I bought my active trader program, and that's where I learned all this form reading stuff. And then I fine-tuned it with some of the Gann stuff a little bit later on, where I came across how to make profits in commodities and started reading Gann. But you will find all of this stuff that I talk about, taking trades like that Aussie dollar trade, that double bottom trade, you will find it in the active trader program online training there. They used to do a free demo. I think they still do that. You can ask them, just go to the website and contact them, and you can check it out for yourself. Let's move on now, and we'll talk about dates to watch on the Aussie dollar US dollar. I have already given this date out. Now, this is a law of vibration cycle date, and it's a larger law of vibration cycle, and I've got the 31st of August 2025. I also have my smaller law of vibration cycle, giving the 1st of September 2025. Now, one thing to note there is that these two cycles will pivot together because they're very, very close together. They will tie in with one of the smaller planetary cycles, which I'll give you in a moment, but they will pivot together. So if, for example, the top comes in on the 31st of August, they will both be there on the 31st of August. To me, this is just great confirmation, and it's new confirmation. I had the 31st of August at the end of last year, actually. The smaller cycle giving the 1st of September, I've only just had recently, so that's been extra confirmation there. I'm really excited about this turn. I think it'll be a cracker of a trade, and it's one that I'll certainly be watching for. The thing is, with this larger law of vibration cycle, it can have an orb of up to a week either side. So for example, it may come in on the 24th of August, 25, 26, 27, all the way up to the 31st, or maybe the 1st, 2nd, 3rd, all the way up to the 7th of September. Now, that alone is still good information to have. A 2-week window where you're looking for a major market top and a really good sell-off, that's good information to have. But it's going to tie in with one of these smaller cycles. And I'm going to give that to you in just a moment. It's narrowed down to 2. I think I know which one it is, and I'll talk about that, but it will be one of these 2. So the nearby planetary cycle dates. This is where you need to go through and do this planetary cycle stuff first because there's less orb on the planetary cycle dates. And when I say orb, I mean coming in early or coming in late. Are we allowing a trading window of 1 day either side, or 5 days, or 10 days either side? Well, the planetary cycle, you can usually get to within 1 or 2 trading days either side. And the nearby planetary cycle dates to watch are the 29th of August or the 5th of September. One of those, I believe, will give us a major top on the Australian dollar, and we're going to run down all of September. That's what I'm targeting in the market. Ever since the end of last year, I've been targeting that as my trade of the year on the Australian dollar. Now, we've just had a pretty good one on the Australian dollar. I think that's going to be dwarfed by what's possible. It's not always easy. Sometimes these bigger cycles will give you, say, the high that comes in before the high, and then the market will just take that out, and then it will crash, and they can be a little bit difficult, but it should be a really good area to be looking for tops in the market. Now, 29 August, 5 September, which one will it be? I like Friday the 5th of September or Monday the 8th of September. I'll be watching both of those like a hawk. Now, if I'm wrong, if it's not the 5th of September or the 8th of September and that area comes in as a low, well, I think the high will have been that 29th of August top. So I'll be watching that very closely as well. Now, these are the forecasts. From here, it's really over to form reading. The forecasting takes a while to learn, but once you know what you're doing with it, it's not that hard to come up with these dates. Now all you have to do is form read those dates. And as I said, if you don't know how to form read a market or you're not doing it consistently, check out those sources that I gave you for Gann's book and for the Safety in the Market course. Now, I don't get anything for recommending either of those. I'm just, as a trader who has been there and done that, I'm just giving you my opinion on what I think is worthwhile. There's a lot of stuff out there in the Gann field. It's not all worthwhile, trust me on that. A lot of Gann gurus out there, they do mean well and they try hard, but in my opinion, they're a little bit lost. And you can generally tell when it's very, very complicated. Compare some of the Gann courses that you've got or that you've seen with that Aussie dollar trade, that double bottom that I gave you. How simple was that? It's a double bottom. Anyone who's been around technical analysis for a week has probably heard of a double bottom trade. And yet there we are. It's a 16-to-1 reward to risk ratio trade there. Now, I've spoken about form reading. If you want to learn forecasting like this, a great place to start, because it is all coded there, is Gann's novel, The Tunnel Through the Air. Now, Gann doesn't make it easy for you, but the information is there. I've recorded an audio version of The Tunnel Through the Air. You can check it out on the Tunnel Through the Air audiobook playlist on this channel, and you can see it's all there. It takes about 12 hours, just a little under 12 hours to listen through. And of course, you won't learn everything on one listen through. Gann recommends reading it 3 times. I had to read it a lot more than 3 times. Obviously, it's here. It's recorded for you. You can listen to it on the go. and you can work your way through it over time. The important thing is to listen to the whole book at least once so that you can get the information into your head, because once it's there, everything that you see and that you hear, etc., through your senses is all going to be captured in your brain, and your subconscious can work with that over time, and you can get nudges in certain directions because your subconscious is trying to tell you something. So at least listen to it once. Hey, it's the Easter long weekend. If you've got some downtime and you want to do something for your trading, stick Tunnel Through the Air on, have a listen to it. If you're going for a walk, listen while you walk or while you drive in the car. But there's a lot of really good information in here, especially, as I said, those law of vibration cycle points. Also on this channel, I did a video on the Ticker and Investment Digest article where Gann spoke about the law of vibration. He said he would not reveal it for any price. He certainly didn't in any of his writings reveal the law of vibration, but he did encode it into the Tunnel Through the Air. If you think about it, people say, oh, the Tunnel Through the Air, that's just a love story. It's just a lousy love story. Now, firstly, on that, the first time that I listened to it, it really resonated with me, and I really got behind the character of Robert Gordon. He's a hero, and I just thought, yeah, he's a great role model. We need more Robert Gordons. I loved the book. Over time, as I read it, I learned, okay, there's more going on here, and I've done videos on the channel about that. There's one called How to Decode Tunnel Through the Air, or Where to Start Decoding. That's in the playlist called Guidance for Gann Researchers. If you want to do some background work to help you understand certain things in Tunnel Through the Air and where to start decoding it, there's a video on this channel called Recommended Reading for Gann Researchers that I'd encourage you to get into if you haven't already done so. What I've done in that video is I've narrowed your reading down to about 20 books as opposed to hundreds and hundreds of books that will get recommended to you in the field. And in the books, in this presentation, I guarantee you there's a lot of really, really useful information that's going to move you forward on your Gann journey. Now, as we draw near the end of this Easter Sunday edition of the Forex Form Guide, I just wanted to wish you and your family a very happy Easter. I hope that you've had a nice weekend. Whatever your religious beliefs, just keep in mind today is an important day. If you're a Christian, you know why it's important. We believe that Jesus rose on the third day. Gann wrote in the foreword that once you have understood Tunnel Through the Air, you will understand why Jesus rose on the third day. You'll also know that Gann said that the Bible was important and that the story of Jonah was important. And in the story of Jonah, Jonah was in the belly of the whale for 3 days and 3 nights. Go to the Tunnel Through the Air audiobook, read through the foreword again. The number 3 is plastered all over the foreword of the Tunnel Through the Air. So obviously, as I said, whatever your religious beliefs, today is an important day. So happy Easter to everyone. I'll be back next week on Sunday, the 27th of April, and we will revert back to the usual format of going through the major currency pairs and setting them up for the week ahead. But until next time, all the best with your trading, and bye for now. For those of you who stuck around, welcome to the post-credits scene. You can find some clues to Robert Gordon's 7 days in the work of Safarial. So there is a clue for you. In the Tunnel Through the Air, Robert Gordon's best friend is called Walter. Safarial, who is the most prolific author on W.D. Gann's recommended reading list, Safarial's actual name, Safarial is a pen name, his actual name is Walter Gorn Old. So Walter is his first name. Robert's friend, Gann's friend. That might mean that it's very important for Gann seekers such as ourselves. So you can find some clues to Robert Gordon's 7 days in Safarial's work. Oh, you're still here. Sorry, it's my bad Ferris Bueller impersonation. That was the first post-credit scene I think I ever saw. No, it wasn't. Masters of the Universe, Skeletor saying, I'll be back. That was the first post-credit scene, 1987, that I ever saw. I think Ferris Bueller came later. But for those who did stay, it's in the basis of Scripture Prophecy, the book by Safarial. You will find some clues to Robert Gordon's 7 days in Safarial's work, basis of Scripture Prophecy. There you go. Aren't you glad you stayed around till the end? Oh, and it's in there more than once. Okay, that's really all for this video. Happy Easter, all the best, and I'll see you next week. Bye for now.